Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 28th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den will. Any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 29 points. 24,803 is the print. S&P is up 1.5. NASDAQ up 5. Russell's up 1.5. Semis are up 3. And we've got green arrows across the board with the exception of the transports. They're down $76. Gold's up $5. Trade down at $12.96. Silver's up 14 pennies. Light sweet crude is totally flat out here. Natural gas up nearly 20 cents out there, 7%. The first email came from Tom, who was taking a look at should he get out yesterday inside of being long natural gas by UGAZ. And you heard it here live. We said, no, that's a buy. Don't get out. And his email said, thank you very much. So, yesterday it was trading, around the showtime, right around the price level of, where was that? Figure 58.62, and right now it's trading at 71.18. So he hit a home run, a grand slam out there. And so Bob wants to take a look at UNG. So why don't we just kind of shift right over and do that? Let me change charts here. Had a technical glitch that wasn't sure if I was going to get on the air properly. Anyways, we did. So give me a moment here. File, workspace. Let's see if this chart has updated. The internet went down on me, and that was a bummer. Yeah, it's updated. So, Bob, are you in UNG? Or tell me what you're thinking, what you're doing out here. And when we talked yesterday, and we were analyzing the UNG, in essence, UGAZ, my suggestion to Tom was to stay in the trade for longer than just a day or so. But in this case here, he made so much money, retirement kind of money out there, that he just decided to take the profits off the table. But natural gas made a nice bottom. And you've got a nice A to B equals CD pattern, Bob, that formed out here. And we know that this was trying to form that bottom. We had three different, let me get my cursor out here going, with three different bullish signs. One on December 18th. Of course, price ran right into Stevie's red line, rejected that. We had another one that formed out here on December 22nd. Price on the next day, December 26th, just a couple days ago, looked like it was trying to break over Stevie's red line, did not, failed, closed underneath it. And yesterday, during the trading day at this time here, the way that the candle formation looked and a couple of other things, well, one was your back. In this case here, Tom's back was up against the wall. Support was not too far below where he entered. We'll take a look at your $6 price. But when you have this A to B equals CD pattern out here, there's really, in essence, 4 different outcomes. And let's do this. Let's go take a look at, and the thing is, I'll pull up UNG for you. But, Bob, you've really got to focus on what's going on inside that natural gas contract. And I think especially inside UNG, at some point here, they're going to add, right now it's just the February contract. They will add the next month's contract here soon, and that could impact your trade. But if I just take a look at, in essence, the A to B equals CD pattern, similar. Okay, it's not the same, but just similar. And we take a look, I believe it would have started right around November 13th and all the way down to the low of just a few days ago. So you can see how, in essence, this equity here gapped up this morning above the 0.382 retracement. And that's at 568. You're holding for above 6. 605, the 0.618 retracement level, is where price should head to next. In at 516, that's great. Nice trade there. At this stage of the game, based on what we are looking at here inside the natural gas contract, and we'll go take a look at those TAS profiles, right? Because that's a second element that we need to look at. But to me, Bob, this is headed back into that C point of the A to B equals CD, the November 13th high in the 320 area. And in the case of UNG, it could be this November 29th area, the 630-ish range out here. But right now it looks like a really good trade. Now let's go confirm whether this is a really good trade or not. And the confirmation, I mean, it's already proven to be that. If we take a look at natural gas, we look at the February contract. I just have to find it here. And we want to just take a look at our TAS market profiles and see what we can see. So here's the beauty of it. And one of the things that we looked at yesterday was that price. We suggested to you that price was going to go tag this 286 level. Well, it's done that. You're trading well above it. That is, remember, when we took a look at this profile, we said that could be a spot where it's really going to tell you a lot about natural gas's contract and where price would go. And the reason that we said that was because we turned off price. We looked at this TAS market profile, this daily market profile formed out here December 19th. And what we noticed was that middle of the box, center line of the box, usually it's never really in the center. That gives us a little bit of a bias. This is closer to the top at 286. Because of that, the snipers, the sellers, really should have been camped out at that 286 level. Don't hold them right to the tick, but right in that area. And the mere fact that price has been able to pummel that area, being able to get above it, tells you there's a significant change in trend that is underway at the moment. That really takes me back to this, at this stage, as I look at this, the November 29th high. That high is $3.21 out here for the contract. I believe that is where it is headed. I have no guarantee that that is the case out here. If I look at the same A to B equals CD pattern, Bob, and I'm looking at this on the weekly time frame, you see UNG made it up through the 0.382 level. The natural gas contract has not. So really the focus needs to be, if you're going to trade UNG, you've got to be able to make sure you've got access to that natural gas contract. And look, there's plenty of ways to do that. I believe there are. You can do it one way, I think for free, just by signing up for a what's Nadex, right? Just go get a free account with Nadex. I think that'll give you access to this. Steve Rhodes with TFNN. Nice trade, Bob, in Spokane. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Phil is in ticker symbol WNDW. He's in this at about $4 out here. This is Solar Window Technologies. Wow, what a day this thing has had! What a day this thing has had. I don't know what the news was, but when I say what a day, you can see the daily chart. This has been up as high as 1050, down as low as 645. That's a whopper of a booger out there, but nonetheless fills in at a good price. So how do we assess this? You know, again, so hard for me. This is an illiquid. You know, when I say that, use it in the context of not a lot of liquidity. Okay, what I mean by that is if you take a look at October 20th as an example, 35,000 shares out there, 12,000 shares October 24th. You kind of get the picture. You know, now you got it today where you have a lot of volume, 1.5 million shares out here. But, you know, Phil, when I see stuff like this, you know, it just looks like even though it's a $10 stock, there's a lot of pumping going on in this equity. From a technical standpoint, you know, today's big old bearish engulfing candle as we speak right now, that doesn't bode well, that's for sure. But this thing is being pushed around and manipulated, and you're lucky to be on the good end of that manipulation out here. But there's just not enough information here. You really have to, I would think, you really have to dive into this thing technically and try to understand it. Now, there's volume of 5.6 million shares the month of August 1st, 2007. Again, I don't diddly about this other than when I take a look at something like this, I'm like, technical analysis isn't going to do much for you here. But price is trading, let's see, the low is 855, you're at 806. You're testing that swing point on a monthly basis with similar type volume. Even though it's rejected, it says, hey, maybe price is up there. I just see something like this, and I just say, man, be careful. I don't know what Solar Window Technologies does out there. It may be a great, legitimate company out here, but shareholder-wise, this thing's got a lot of work to do in order to wet my whistle out there. So best of luck. Let's go take a look at, let's cross your fingers and hope that the internet stays up here. That would be nice, at least for the next 40 minutes for all of us. Let's just kind of go assess the markets. I literally just jumped back into the driver's seat after being gone all morning. And so I'm just looking at this fresh. And so for me to get a gauge as to what the markets are doing, I'll just kind of take you through the process that I really take a look at. And it's from a couple of different perspectives. But the first thing I want to take a look at is, hey, what's going on inside the summation index? What's going on inside the advanced decline line? What's going on inside the 50-day? What's going inside the spot volatility index as it relates to its 50-day exponential moving averages? So as we look at the NYSE left panel, NASDAQ composite right next to it, and the Dow next to that, those three panels, we can see those advanced decline oscillator readings are each above zero right now. So at a minimum, that is short-term bullish out here. And we have the spot volatility index, which yesterday did close above its 50-day out there. Kind of an interesting day, just barely above it. Yesterday, I would have been at the end of the day. 1033 was a 50-day. The close was at 1047. Right now, we are back below the level of the 50-day. 1033 is the number. We're trading out at 1017. So I'm not sure what to make out of it other than prices trade below the 50-day, and that is also short-term bullish out here. Okay, so that's being said, you and I take a look at those three charts, and we call them short-term bullish. Now let's just go one step at a time. Let's take a look at the New York Stock Exchange. Let's go take a look at Stevie's other set of tools out here. Now, what we know, even though this has made a new all-time high, we know that price is moving higher, doing less relative energy out there. What we also know is that, and that's a potential that it's trying to make a turn around to the downside. Not a bullish candle, I mean a bearish candle today, by the way. Good. Okay. So, geez, my apologies, folks. As I said, having some kind of trouble with the internet around here. That was a perfect live example. So hopefully you'll be able to see the charts here. But either way, I can describe what it is that you should be looking at come tomorrow. And inside the New York Stock Exchange, if price were to close below Stevie's red line, that may be an inkling of a potential short-term top outer, 12,821. So that's one of the things that you would be looking for. I can't calculate right now the net decline initiatives you would need to take that advanced decline oscillator below zero out here. I'd give that to you if I could calculate it. I can't. I'm going to go to the NASDAQ composite now. And inside the NASDAQ composite, what we know about the NASDAQ composite is it actually formed a topping pattern. And it did that on the trading day of December 19th. Price was moving higher, doing less relative energy. And over the course of the last 4 trading sessions, price is down below Stevie's red line. It's kind of like everything's just kind of gauging and getting ready. It looks like to me, getting ready to make some type of retracement. I don't know if it's 3%, 4%, 5%, 9%, 10%, or more. It's just because the pattern doesn't tell me where price wants to go. We just can look at other levels of support, watch, see what happens, and go from there. But the NASDAQ composite, even though short-term bullish, when I take a look at the advanced decline oscillator reading, the daily chart here is giving us a pressure or sell signal, so to speak. It's a confirmed sell signal. I don't want to use words that like Basil likes to use, like signal and what's a mode or what have you. But sometimes I just simply have to. So you've got a sell pattern, a valid sell pattern. Hey, how about that sell pattern inside the NASDAQ composite? If I take a look at the Dow, and inside the Dow, you'll see price was moving higher, doing less relative energy. Do we have any kind of bearish reversal signal here? The answer is we don't. We just simply do not. And by not having that, now we could have it tomorrow. So yesterday was a little doji style-ish candle. Today, as we speak right now, it is. You have a gap to the upside, small little gap to the upside. So if there were to gap down below today's low, you might have a little island out there. So that's what I would be looking for. Of course, we have to keep everything in perspective. I don't know what the end of the day's candle session is going to look like, but I'm just trying to help you navigate. So look, we're going to go to a break. I'll make sure that we've got everything up and running properly here, and we'll be back in just a few.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So that leaves us with the S&P 500 to take a look at it. Again, we mentioned the spot volatility index down below zero. Down below zero, down below its 50-day exponential moving average. You see, I cannot do two things at one time. If we take a look at the S&P 500, this too gave us a nice confirmed top, short-term top out here. It did this on the trading session of December 19th. Price was moving higher, less relative energy. Before then, December 18th, nice bearish reversal signal. Price now trading below Stevie's red line, 26.89.78. Hey, look, the other side of this trade is come today, come tomorrow. If price closes above Stevie's red line, then what you're likely to see in the S&P 500 is price move up and probably make that wonderful seventh wave move, singing in the key of G out here. But until price closes above 26.8978, more likely we're going to see price head down to 26.35 before we're going to see it get up to 2,700 plus out there. At least that's the call as of 1:31 in the afternoon on December the 28th. We mentioned the New York Stock Exchange, is trying to give us a sell signal, maybe not. The New York Stock Exchange, top 100 U.S. issues. If we take a look at those, that generated a topping signal for us. Also on the trading session of, when is this? This is the trading day of December the 19th out there. Let me remove this. Remove that because those are not appropriate. Okay, I don't want to mess that up. So you had you had a shooting star on that day. The next day you had a bearish reversal signal. You see we're trading below Stevie's red line. Yeah, price is inching higher, but it can't get that price oscillator, bottom panel of our screen, to actually turn up. So you got sell signals here. We've got sell signals galore in the indices out there. So I just what you should do is, what do they say? Plan for the worst, prepare, hope for the best. In this case here, don't plan for the worst. Just prepare. Don't be surprised if when we begin coming back to the markets, the traders start getting back to their desk, if you start to see the markets move lower. You should not be surprised by that. Does that mean you go ahead and sell like they talk about? Many others are just waiting for the beginning of the year to trim their positions out here. And that trimming, is this a tax consequence thing? I don't think so. Quite frankly, I've never bought into that BS. That tax structure issue is at the end of December or the beginning of December. It's not the beginning of January. Here's where you start to do your tax analysis and figure out your gains and losses and figure out, so it's before. It's not the after. However, here's where the selling could easily take place out here. And this is where portfolio managers are taking a look at, these guys that deal with just simply having certain percentage in equities, a certain percentage in REITs, a certain percentage in MLPs, a certain percentage in commodities, maybe. A certain percentage in bonds. You know the whole thing based on your age category. And this year, and as we speak right now, things could be out of whack. And so they're going to rebalance. Do you rebalance now? Probably not. You don't rebalance now when you're going to potentially, depending on if these are short-term gains, potentially paying a higher tax now than you would next year. Of course, we don't really know that to be the case out there until we really see these tax rules and figure this stuff out in those tax brackets. I've done some research on my own, and the taxes actually increasing a bit, but until I actually see everything out there, so don't be surprised, okay, if you see some selling, which I think is more likely a rebalancing effect than it is anything else. And then also prepare yourself for the the buy opportunity that is in January. Those of you that are adding retirement funds to your accounts, make sure that you have everything in line to be able to add those around the end of January. Just prepare to do that. Do not wait until April 15th when you've missed out on typically a significant chunk of change for the entire year out there. So I'm not on a soapbox, or hope I'm not. Just preparing you for the normal pattern, and tax bill and all that stuff aside, we cannot just totally ignore these patterns out here that help us identify short-term tops and short-term bottoms. Okay, so enough of that. I'm sure that one or two people want to go take a look at metals, right? See what's going on inside of the metals out here. If we go take a look at Goldilocks, we take a look at it. Price is nearing its resistance line, that red dash line of the 1301 type area. Still looks muy bueno out here. Looks very good for gold. At some point in time here, gold's price oscillator on this February contract is going to get up to the zero line, and when it gets up to the zero line, what you can anticipate is price and Stevie's red line are going to catch up to each other. What configuration that's going to take? Sideways move, price pulling back while the oscillator and change line is rising. Now, I don't know which one. I just know that it takes place. Doesn't have to take place immediately, or predominantly takes place out there. It is not a 100% system, but boy, it is so good. You do not want to ignore it. So all looks good right now. Peter yesterday, I think, was asking me whether or not we saw a short-term pullback, and we didn't at that stage. I still don't see one just yet. I'd have to go searching for some other short-term charts out here. And we also want to go take a look at what's going on the profile system. And if we take a look at gold, we'll go use Stevie's synthetic contract out here and just look at short-term, because when we looked at short-term yesterday, we were looking at these profiles. They still continue to be bullish. We saw basically a pullback at about 8 a.m. this morning, 8:30. This is an hourly chart, so that's 8 to 9. I think after some jobs numbers or something were produced, and price just came down, tested 1290.70. That was the center of the box on a 60-minute chart out here. Ricocheted off of that. Green shoots on the 60, green shoots on the 240, green shoots on the daily, and it looks like the weekly still has this 1322 objective out there. But we are going to see some type of easing off of the pedal inside of gold over the coming trading sessions out here, or it sure looks like we are. If we take a look at silver out here, silver looks good or gold. Silver looks like it wants to trade up into the 1720 level. Its price oscillator in the bottom panel has quite a ways to go before it gets up to the zero level out there. So silver looks very, very good. If I look at silver's price target, we go take a look at its set of synthetic profiles. Green shoots on the 60, on the 240. On the daily chart, they haven't reared there. And on the daily chart, all looks very good there. In fact, you'd say 1730 is the top of the target. 1740 is the level inside of the weeklies. Longer-term objective. That's the top of its brand new TAS market profile. Dow is up 31 points. S&P is up 67 pennies. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. No requests on the table, so Steve-O doesn't really know which direction to go in out here, because I kind of hate to repeat myself and much prefer to provide you with valuable information out there, specifically with regard to what it is that you might be trading. So where do we go? Where do we go? Let's just take a look at. I don't know. What do I want to look at out here? What do we want to look at? Do we want to go into the sectors? Nah, that's just kind of boring out here. Let's take a look at some individual. Let's go take a look at a couple sectors. Let's go take a look at the IBB, for example, out here. We'll do it on a couple of different charts. That doesn't seem to be populating too well. Must still be having trouble. So here, if we take a look at the IBB, let's do it this way. This is a daily chart here for the IBB, and we can see, making one of our favorite bottoms, like it does tops, with the price being stretched out here, and we can see that since November 16th out here, the IBB, the biotech sector for the Nasdaq, has continued moving higher. You can see that price has really been able to get above resistance, and that old resistance are the levels where you should be looking for possible support on this. And that really is going to be at this area. I'm just simply going to draw a line in a moment. And the line's going to be drawn across the high of December the 14th. And that is the level, give or take. I'll give you what that number is. That number, by the way, is 107.28 out here. And so that is a level. You can see it was tested today. That's a level you'd like to see price hold inside the IBB. That's the first area. The second area is going to be Stevie's red line, 106.42. Now, I am going to go on a limb. It's not a very big limb out here, and say that we're going to see a test of price in Stevie's red line relatively soon. The reason we say that is because you can see that it was just a few days ago when the price oscillator bottom panel was getting above zero. And so price is either going to pull back, move sideways as Stevie's red line moves higher out there. And it's going to be that test that will tell you whether this is a bullish setup or whether this is a bearish setup out here. And that is in the IBB. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Pretty good, Steve. Steve, with the anticipation of natural gas going higher, would you buy the UNG here today, or would you wait to see if it possibly pulls back into the gap where it gapped up today?
So, Mike, I wish that you were listening to yesterday's show because we gave a free trade on the air, a buy signal inside of UNG, inside of natural gas. So yesterday was really the buy signal inside of it. And now this thing has really, gapped away. What I'd really have to do here on this contract is switch times. Let me come to a shorter time frame now, maybe like a 30-minute time frame, to see if we can get any kind of gauge as to what it's doing. So this is going to repopulate itself. Just looking for some kind of pattern out here to suggest that this thing, because you'd like to buy this, you'd like to buy this on a retracement. I don't think the retracement is refilling the gap. Okay, so I don't think that. I think, do you chase it here now? I don't know. The real trade was yesterday, and we went through it during the show, and it was relatively clear. Now that didn't mean that when we gave that trade, we anticipated that it was going to move higher like it did today. But let me try to go to a larger time frame. Let me try just a 60-minute time frame out here for natural gas, and I'm not seeing anything here. I'm going to go to the market profiles and see if we can come up with something there for you. Do I suggest that you chase it now? I don't. That's a tough one.
I'm not good at buying breakouts.
So, let's see here. Let me get to this. Now I've got a 60-minute time frame and a 240 and a daily, and I don't have any. I don't have any type of signal. Let me switch to even lower time frames out here. I don't have anything right now at 147 that we could hang our hat to suggest that this is going to pull back and where it would pull back to for you to take a look at entering inside the UNG. I do believe that that you've got to make that decision not on the ETF, but what's going on inside of the February futures contract. That much I know. Depending on how committed you are to the trade, you could use a wider stop and add a portion of it. So you could kind of take a small piece and have a wider trade, be ready to add, because this could have a lot of momentum to the upside. Again, on a short-term basis, I'm not seeing really any resistance for you, and the daily chart does say that this thing does want to go a bit higher. But simple answer to your question was yesterday was the day, and we gave that trade away, as it was happening on the air.
All right. Okay, well, thank you, Steve.
Yeah, no problem. I wish I had better information for you, but I got to call them like it is. All right?
Okay. Thanks.
Okay. Hey, and Happy New Year to you. Thanks so much for calling. That was Mike in Ormond Beach. And that's always the tough question, right? When things break away and they gap away like they did. I mean, UGAZ is up like 20%, I think, as we speak right now. So what would happen is we'd see some type of pattern, maybe an A to B equals CD to the upside out here. If I put this on a here on the 240-minute chart, you'll see it. So let's go take a look at the small A to B equals CD. It's not so small, is it? As we take a look at it and see where we're at. The A point is down here. Again, it's the 4-hour chart we're looking at from 6 a.m., around 6 a.m., December 21st. That's your A point. Here's your B point. Here's your C point. We're already at the 1 to 1.618. Mike, if there's anything you can hope for, is that typically when you do more than a 1 to 1.618, A to B equals CD, you see some type of pullback. But as I say, when I look at a 30-minute chart out here, it's very bullish. The reason why I say it's bullish, just so let me come back and clarify that, because somebody might say, well, Steve, there's a set of profiles out there, and there are underneath price. And that is a extremely bullish event. You don't see that occur often. We do see it. And there was a brand new set of 30-minute profiles that formed out here at 12:30, but they formed underneath price, and that is very bullish. Can price pull back inside this? It could, but the meaning, technical meaning out here is, man, that's a very bullish event on a short-term time frame for natural gas on its using a 30-minute chart out here. So as I say, sometimes you just got to do what you can do, and that's the best that I can do at this stage of the game. Okay, so we were talking about the IBB, so we think we kind of knocked that out of the way. We're about to go to a commercial break out here. If you want me to look at something in the last 2 minutes out here, send that email in quickly or ping me inside the den as we go to our last segment of the year for the Trader's Edge. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Back, folks. So we got two requests for this last 2-minute drill here. The first from Aaron in snowy Spokane, Washington. Thanks so much for listening out here. And he wants to take a look at the Agrium. Ticker symbol here is AGU. Now we have the monthly chart up on the screen because this tells the picture out here. And when I say tells the picture, you can clearly see the areas of resistance. 113.88 to 116.81. We're dealing with the swing point, the all-time high. What was the once all-time high swing point from 2008 out there? That high was 113.88. 124 million shares were traded there. Price tried to move up here in January 2013 with 14 million shares. Bearish reversal signal forms. The next time price tries to get up here is February 2015, 11 million shares. Little bear sash, bearish engulfing candle. That's why the top of that candle, the month of March 2015, is resistance, 116.81. This month, we're up here with 6 million shares, even lighter shares. Look, price can take out resistance areas with light volume. It can be done. If that's going to occur, then 116.81 and 113.88 should become new support. Old resistance, new support. But right now, it really hasn't proven itself. If that says, if it can't do that, expect some type of retracement. Retracement to where? 102.26, 95.04. But if price can break above this area, 116.81 specifically, then you may have a change in polarity. Let's go take a look at coffee to finish this off here. This is for Bob. Also, we got a lot of Spokaners out here. And with regard to coffee, if I look at this is the March contract, 30-minute chart looks good. Trade above profiles, green shoots. 240-minute chart looks good. Looks like an A to B equals C to the upside here. So your next anticipated price level, see if we can get this in here quickly, where price is headed to about 126.65 to 128.21. So all looks good. It looks good on the daily basis as well. So have a cup of Java on me. Folks, have a great New Year's Eve, and I'll look forward to being with you on, I believe it is January, is it the 2nd or the 3rd? Whichever date it is, I'll be here. Take care. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.